Well, good morning, ladies and gentlemen, and it's a great pleasure to be here this morning for the start of the City UK's conference. And it's a pleasure to follow John, who is a regular guest before the committee, and I'm sure that he enjoys every visit, as some of you will do when you come to give us evidence. Now, as John McFarlane said, there is life beyond Brexit. I have to say it doesn't feel that way in Westminster at the moment, so it's very nice to come and see an audience who hopefully are thinking about life beyond Brexit. And Miles, thank you for that kind introduction. I think when people talk about leading parliamentarians, perhaps they mean most outspoken. So, but that's part of what a select committee chairman is all about. Now, I've been asked to talk about how policy can support global trends in the financial services industry, including digitisation. I've got to say that word several times, I shall trip over it at some point, and customer centricity. Now, when John comes before us, our job as a committee is obviously to scrutinise and to challenge him and the work of the Treasury. And it's in that critical, some might call it contrarian spirit, that I'm going to challenge the premise of the topic on which I have been asked to speak. Because I don't think it is the role of policymakers to support global trends. Parliament has set objectives for financial regulators. Competition, market integrity and consumer protection for the FCA. Safety and soundness with regard to competition for the PRA. Now, of course, Parliament may in future wish to re-examine these objectives, but they are unlikely to change substantially. Because the objectives follow from what ordinary people, our constituents, rightly expect from financial services. And I think that what John was saying at the end there about the need for the industry and for business to show this on the side of ordinary consumers is incredibly important in the current environment. Constituents want their money to be safe. They want savings, investment and other financial products that meet their needs. And they don't want their taxes used to prop up failing institutions. Parliament generally, and the committee specifically, expects the regulators to consider how global trends might support or threaten those objectives and harness them accordingly, maximising the opportunities and minimising the risks. So to return to the theme, they expect the regulators to be customer-centric. Now, as the City UK has rightly highlighted, first among the trends affecting how financial services are provided is digitisation. Customers are increasingly connected to the internet by their phones and computers. Data can be processed and shared ever more quickly. It's easy to think that this is unequivocally marvellous, but it leads to risks as well as opportunities. And depending on how firms and regulators respond, it can result in more customer centricity or less. So let me offer a few examples to illustrate that point. First, the shift online has led to heightened customer expectations about service level availability, particularly in banking. Finding oneself locked out of internet banking is fast becoming equivalent to turning on the tap and not getting any water. So as firms use the availability of online banking as a reason to close branches, the committee and regulators will rightly become less tolerant of IT failures for the quite simple reason that the detriment caused to consumers is greater than ever. Second, just because firms can understand their customers better thanks to big data, it does not necessarily follow that this will lead to better consumer outcomes. In economics, when a firm knows more about their customer, it tends to reduce customer welfare because nobody gets a bargain because the seller knows exactly how much each buyer is willing to pay. So as firms get to know their customers better, we have to ask, will their behavioural biases be counteracted or exploited? Will there be advertised products that reflect their individual needs or their individual vulnerabilities? As products become more tailored to an individual's circumstances, will the choices they face become simpler or more complex? And does customer centricity mean a more personalised form of PPI mis-selling, or does it mean genuinely consumer-friendly product innovation? And third and relatedly, digitisation will only drive consumer-friendly innovation in a competitive market. Levels of competition are stronger in some parts of the financial services industry than others. It's striking that 3 years after the introduction of pensions freedoms, the promised innovation in retirement products is yet to materialise. And it's too early to tell if open banking will solve the decades-old problem of weak competition in the banking sector. Now, undoubtedly, the fintech revolution holds out great promise. And I want to support what John was saying about the need for schools and colleges to make sure that the workplace and that the future pipeline of talent for the workplace has the skills that they need. But so far in relation to fintech, the most significant effects have been helping banks to cut middle and back office costs. It's perfectly sensible for banks to pursue these efficiency gains, but they only get passed on to end customers if there are competitive pressures. Next, many of the purported benefits of digitisation, including open banking, arise from the sharing of customer data. But the Facebook Cambridge Analytica scandal has caused a breakdown of trust between consumers and firms that hold their data. So the financial services industry has to look closely at the lessons from the tech industry, where customers, through their data, have become the product. And it has to uphold the highest standards of care and stewardship of personal information. The industry cannot afford to lose the trust of customers through data breaches or the mishandling of personal data. And finally, whatever the benefits, there will remain a group of customers who insist on using cash, want to access branch services, and want to use cheques. They want to deal with their insurer or their pension provider on the phone to speak to a real person. They have vulnerabilities that may mean they require extra help in accessing and using financial services. So as digitalisation becomes more pervasive, this group will appear commercially less attractive to serve, but they must not be left behind. Now, if all this sounds rather cynical, let me sound a note of positivity about the future, and particularly, as I say, for the fintech sector. Because as the UK leaves the EU, the city faces an enormous challenge in retaining its edge as a leading financial centre. So in that context, the efforts by the government to help London become the global centre of fintech are not just gliding around the edge of the square mile. They are a key component of the country's industrial strategy. And the government is right to create a framework of support for the industry through its fintech strategy. And it is right to be thinking in particular about how to improve the sector's access to talent, as I've said, particularly coding and software skills. Now, the regulators play an important part here too. And on a recent trip to the US, the committee heard how US regulators and firms see the FCA's regulatory sandbox as a world-class initiative. Now, the committee regularly scrutinises the FCA, the PRA, and the PSR. We like acronyms, obviously, in the committee. And it's interested to hear from fintech firms about their interactions with the regulators. So let me just conclude by talking about some of the work that the committee has been doing. Since the 2017 election, the Treasury Committee's work has, to use the City UK's chosen term, been customer-centric, responding to the concerns about conduct and culture in parts of the financial services sector that are expressed to us daily by our constituents and that fill mine and the Treasury Committee's inboxes. And our work has also reflected the growing importance of digitisation and other structural economic trends. For example, the committee's inquiry into household finances, which we'll report in the coming weeks, has looked at the increasingly complex financial choices that face ordinary people. Rising life expectancy and lower interest rates mean that young people will need to save more than their parents did to have the same standard of living in retirement. On top of that, wage growth is slow, and rising self-employment means incomes can be more erratic. It will be ever more important to ensure that people have access to the advice they need to plan ahead, and that financial markets are delivering the savings, investment, and pension products that meet people's needs. The committee is also conducting an inquiry into economic crime, which is split into two strands. One focused on high-end money laundering, terrorist financing, and sanctions violations. The other on economic crime at the level of consumers. The spate of fraud at TSB has graphically illustrated how botched IT projects can create a goldmine for fraudsters. At heart, there is nothing new about most cyber frauds. They are an old-fashioned confidence trick that deceives people into thinking that they are speaking with their bank. But partly as a result of digitisation, they are becoming ever more sophisticated and convincing. The committee is also closely monitoring proposals to reduce the size of the free-to-use ATM network in the UK, and we're concerned by the mixed message faced by consumers and the risk of a large reduction in the number of free-to-use ATMs. Paul Volcker famously said that the ATM has been the only useful innovation in banking for the past 20 years. Now, I think that's just a little unfair, but I think the importance that consumers attach to access to their cash cannot be overstated. The committee's inquiry into digital currencies illustrates well my point that technological change creates risks as well as opportunities. And I hope that the committee will shed light on the often heated debate about the benefits of digital assets and distributed ledger technology. And I expect we will come to conclusions both on how regulators should be approaching digital currencies, ICOs and derivatives, and whether and how government should be responding to new applications of that distributed ledger technology. Finally, I would draw attention to the committee's inquiry into SME finance. Entrepreneurs and small business owners are frequently held up as the backbone of the economy. We need to make sure that they are treated fairly when they borrow from banks and have access to justice when things go wrong. And we also need to make sure that capital markets are functioning effectively to provide entrepreneurs and small businesses with the finance they need to grow and thrive. So let me finish by returning again to the theme of customer centricity. Economics teaches us that in a well-functioning market, the consumer is sovereign. Their wants and needs determine output. Customer centricity happens naturally. The fact that we are talking so much about it today shows this hasn't always happened in financial services. In some parts of the industry, poorly functioning markets have caused a misalignment between the interests of producers and consumers. And that will remain a risk so long as competition remains weak and so long as customers struggle to make well-informed choices about the financial products that they need. But the consumer will remain sovereign in the committee's thinking. We will judge innovation in financial markets, including digitisation, not on the basis of novelty or technological ingenuity, but on the evidence about the costs and benefits for ordinary people. Thank you for listening. I hope you have a really fantastic rest of the conference.